everybody. Welcome to this open house session with Eusebio. This is live, of course, and it's the, I haven't got the date up, I'm sorry, one moment. It's Tuesday, the 10th of November, 2020. Eusebio will be taking us through the various charts. We'll be monitoring them. There'll be little bits of training on the side, but thank you for coming along. Just as a word from the sponsor, we've got a new series of courses coming up at the end of this week. On Thursday, Eusebio will be running them. So if you're interested, let us know if you haven't received anything about it. And we'll let you know if you get into discounts because you're retaking the courses. If you retake the courses multiple times, then there's no charge for retaking them. If it's your first time, then we've got special discounts going on at the moment. But they start on Thursday. So that's for both the primer and the standard. As you can see, London has just opened, and Eusebio, as well as showing you the charts, will be showing some of his other assistance that he gives Max members that are free, and also some that are subscription services to help you with your trading. But I'll shut up here and pass you over to Eusebio. All yours, Eusebio. Thank you.
Okay, thank you, Chris. Hello, everyone. Welcome to this open house session. So we are together for around 2 hours, just after the London Open. Before starting, I always like to make a quick audio and video check. Do you see my screen and do you hear me well? So I would really appreciate a yes or a Y in the question area of GoToWebinar or in the private Max chat room for our Max members. Oh, thank you. Thank you, Connie, Peter, Ben. Oh, it's too fast. Gary, Mark, Gary, Sophie, Jono, Peter, Boldev, and sorry if I forget some of you, but there are too many people answering. And the question area of GoToWebinar, I must limit its size, so I cannot answer to everyone. So thank you very much. I really appreciate. So the London Open has started in around 3 minutes. When we observe the Forex Factory calendar, let me show you that. So we have a few news today here in the Forex Factory. If I go on the today page, we have at 11 my time, which represent 5 a.m. New York time, so it will be in around 3 hours now, 2 hours, sorry. 2 hours, 3 hours, yeah, in 3 hours. So we will have the Euro, German, EU economic sentiment and the EU economic sentiment for the entire Eurozone area. It's noted as a yellow news on Forex Factory, but it is a news which may have an impact in the market when there is a big deviation, so a big difference between the forecast and the actual data. Later on during the day, we will have other news, but for the European session, there is no other important news. Another important news will be during the ASEAN session with the Reserve Bank of New Zealand official cash rate and rate statement. And so for those of you who trade the ASEAN session, this may be an interesting period to consider. So not a lot of big news today. And so how do we choose the pair to monitor? On our website, in the Newswatch page, and so the address is www.maxtradingsystem.com/newswatch, and all the information we give on this page are free, so you can consult either you are a Max member or not. So the information contains several types of information. First of all, some geopolitical elements which may influence the market. Typical information are, for example, of course, the consequences of the coronavirus in all over the world. Still the problem of the Brexit. Now we are coming progressively to the end of this problem, and also so the US presidential election. which is not closed yet. So the official elected president is not determined yet. So we still have to wait for all the procedures to be done, and so we have to be patient. But in the meantime, this creates some tensions or some actions in the market, and we have seen yesterday, for example, suddenly around almost noon European time, Paris time, so we have seen a sudden movement in the stock market, in the forex market, and we have seen, for example, the stock market moving nicely higher, so because the market are considering, or this is what I think, so are considering that Biden is the winner of this election in USA. But things are not definitive, so we have to be extremely prudent. A second section on our webpage is a simplified calendar, where for each day of the week, Monday, Tuesday, today, Wednesday, tomorrow, Thursday, and Friday, we consider only the news which may have really an impact in the market. I say which may have because even if it is an important news release, the news release will not have an impact if there is not a big surprise. As I have said, for example, for the EU economic sentiment, if we don't have a big surprise, so even if this news is an important one, it will have no impact in the market. Similarly, a decision by a central bank sometimes may have a deep impact, not only in its currency, but in many pairs, and sometimes it has no impact. It depends, in fact, on the context. It depends on the decision which is taken and then implemented by the central bank. But at least we have a simplified version of a calendar which focus only on the news which really matter. So, and then below that calendar, we have based on statistical analysis, we have a list of the best moving pairs. So what are the best moving pairs? What are the pairs which are usually trending? And it's not a surprise to observe that among them we have all the pound pairs. But this can change next year when the Brexit situation will be finally closed. And normally this will happen on the 1st of January. So we should see perhaps some changes in the best moving pairs. So, and then the last portion on this page is a short list of each pair we advise to consider for every day of the weekend. So for example, for today, depending on the context, depending on the news release, the choice we have to consider are the following. So the pound yen, the euro pound, the euro kiwi, the euro Aussie, and possibly the euro US dollar and the pound US dollar. And this is what I have considered on my screen. If I show you my MetaTrader platform, I'm showing 6 pairs, which are exactly the 6 pairs I have just mentioned a moment ago. On the chart, there is not only the price and some of the indicators we use for the max, but we have also vertical lines. If I make a zoom out here, I draw always vertical lines. These vertical lines are of 2 types. Orange vertical line represent the opens and the close of the session. We have the Frankfurt Open, the Frankfurt Close, the US Open, the New York Open, the Wall Street Open, which is the stock market, the Frankfurt Close, the London Close, and then the US Close, which is the day separator on that 5-minute time frame. And in red, we have a news release when there is a label or a description attached to the vertical line. So, for example, we have at that moment so the 2ZU news on the euro. It's very important to know when the news must be released, because when it is a news which may have an impact on the pair we consider to trade, so we have a very strict rule because we never know what may happen with these news. For some news, it's possible to make some clear forecast what may happen, but most of the time it's really difficult to do that. And so the rule we have is if we are engaged in a trade before the news release. So the rule is 15 to 30 minutes before the news release, we consider to close the trade. We never stay in a trade when facing a news release. If we are not in a trade and before the news release we get a valid entry setup for a trade, if this setup happens during the last hour before the news release, we skip that setup, because with less than 1 hour or maximum 1 hour, we don't have time enough to consider a movement which can be worthwhile to be traded, because the max is a trend following system. And so to have trends, we need to have time. After the news, depending on the news, so we can again trade in agreement with the news if the news has an impact in the market. And then we have some indicator, and one of the most important indicator is our companion indicator, which is this green and red line, which define technical trends. This line is called the slow bias. And technically, when it is green, we have to consider only long trades. And when it is red, we have to consider only short trades. But this is a technical trend. But we have also to trade in agreement with what I call the global context. And the global context is the context or contextual bias defined with all the elements I have already shown. So the geopolitical, the decision of the central banks, the news release, and any event which may have an impact in the market. So it may be a tweet, for example. We have seen plenty of examples these last 4 years when a tweet may have an impact in the market. And so this is called the max advantage bias, and I will show you how I update the bias because this bias really improves the quality of your trades, whatever the type of trade you may consider. This information is not free. It is based on a small monthly subscription. I will not explain the methodology I use to define the specific direction of a trend, of a bias, but I will show the tool we are using, how we indicate to our members, to our subscribers, how to consider these biases. And the first step I will do is to establish, for those who trade higher time frames, so I will establish long-term bias. And so this is a Google Sheet, in fact, which contains three possibility. The long-term bias indicate for a certain number of pairs. In fact, the 28 pairs made of the 8 main currencies, plus 5 indices, 2 commodities, and two bonds, important bonds. I establish a directional bias. And now I'm going to update these bias, and if there is a change, you will see how the change is made. And so so here for the Aussie card, I have a short bias. I will not change it. For the Aussie Swiss, I will not change it. Perhaps the price is reversing, but for me the bias is still to the downside. Still to the downside, still to the downside. And AUD USD still to the downside. CAD Swiss to the upside, I will not change that. CAD Yen, so to the downside. CAD Yen, perhaps it may change probably very soon, or probably not. So the Swiss Yen, I will not change it. The Euro Aussie, I will not change it to the downside. The Euro CAD to the downside. So red down arrow represent short bias. The Euro Swiss. The Euro Swiss, maybe perhaps it will revert, but it's a bit too early to change the direction. The Euro Yen unchanged, the Euro Kiwi unchanged, the Euro US dollar unchanged for the moment. The Pound Aussie, on the contrary, I have a long bias, so I will not change. The Pound CAD still a long bias. The Pound Swiss, a short bias. Yeah, I will not change it for the moment. I have to change a page.
Eusebio, while you're doing that, I'd just like to point out that these are for long-term traders, so for H4 and daily traders, not for 5 minutes. So, yep. So when people say, hey, I'm going long on something or I'm going short, find out what time frame they're actually talking about. So in this case, we're talking quite a long time frame, like 4 hours at least. So, but on the short-term bias, when you see that, when Eusebio brings it up, it could only be available for sort of like 10, 15 minutes, and then it changes to completely the opposite direction, perhaps.
Okay, for the NZD Swiss, I will change it to the upside now, and you will see that the date and the time when I have made my change has been updated automatically. And at the end also, I will change to the upside. and that the USD also. US dollar CAD down, down, down. Now the stock market, they have turned upward, and I will not change the upward direction. Gold, I have a down bias. Crude oil, a down bias. The US Treasury bond, still a long bias, and the VIX a down bias. So these are my bias for the
so while you're doing that, Eusebio, one of the important things with these
because I have some manipulation, so it's difficult to explain and to make some manipulation. So now I'm going to make an update in my notes here. So long-term bias, I've been updated in such a way that all our members will be informed of the change. Yes, Chris, please.
Oh, okay. I was wondering if you could hear me. Okay. One of the things with these biases is they give you Eusebio's the direction he thinks that the price is going to move in. If you have a setup that's going in that direction, then that's great. It increases the chances of of it turning into a winning trade. But if you also get a setup going in the opposite direction, you can still take it, but maybe don't risk as much money on it because it's going opposite his direction. So you can still trade in either direction, but Eusebio is telling you which is the preferable direction and the one to sort of, if you can, hang around and wait for. And if it goes in the, if you see a nice looking setup in the opposite direction, you can still take it, but it not necessarily will it work out properly for you. And so risk less, so put less money on it, make us place smaller orders. Okay, Eusebio, I'm done. Thank you.
Yeah, and I'm going to update my bias for the short term for those who trade short term small time frames. So for the Aussie US dollar, I will have, this is very uncertain for the moment, but I have a small upward bias. So, but it is not clear for the moment. For the US dollar CAD, I still get an upward bias, so the US dollar has some weakness, so the bias is not a good one, so I will qualify it as risky. US dollar Swiss, US dollar Swiss, I have a small upward bias too. Euro US dollar.
So with these short-term biases, Eusebio can maybe have one bias direction that he programs just like now at the beginning of the London Open. And it may change several times through the day afterwards, or it may stay with this one bias right throughout until he leaves, which is around about 5 p.m. or New York lunchtime, just to give you an idea on how he operates.
US dollar yen. The US dollar is a bit weak today, so it's not a surprise to see that the US dollar is short. And this may be a good indication that most probably the stock market will still go higher today. So the euro pound, we have a strong bias to the downside. Now the pound yen. And so this is something I do every day, except the Friday I take my day off. Pound yen, for the pound yen, I have a strong upward bias. Pound Kiwi, I have a good upward bias too. pound Aussie. It's less clear, but still an upward bias. The pound CAD. Also an upward bias, a strong one, though the CAD is rather weak today, at least for the moment. The pound Swiss will be also upward. The euro Aussie. Now here for the short-term bias, which are the bias for day trading, I don't consider the 28 pairs, but I consider 16 of them, 16, sometimes 17. So the euro Aussie to the downside, but with some uncertainty. So I will just put one row, then the euro Kiwi. Euro Kiwi. And so these bias allows me to have a more global view of the market, because I consider not only the Forex, but also the stock market, the commodities market, and the bonds market, which is extremely important to consider. So the euro Kiwi, my bias is to the downside, but with some uncertainties for the moment, and the euro yen. Euro yen should be to the downside too. Yeah. Now the stock market. So the first one is the S&P 500. So we have indeed an upward bias. The Dow Jones. They are often very well correlated, so it would not be a surprise to see also a long bias on the Dow Jones. Sometimes the Nasdaq is not always in agreement. With the Nasdaq, it's less clear today, so I will set only a one row. And so now the DAX, which is the German stock index. So we have an upward bias too, which is not a surprise. The DAX is often well correlated to the US market and the FTSE 100 in UK. And for that, I will have also a nice upward bias. And then the two commodities, gold. So my bias will be a bit to the upside, but not very clear. Crude oil. Crude oil will be to the upside, but not very clear. And then I have to check the two treasury bonds. Just need a moment because I must change the tools I'm using. Okay, I will check the treasury bond later. For the moment, I don't have access to the tool I'm using. And so now I'm going to note for the different pairs. I have put on my screen my bias. So the pound yen, I have an upward bias. The euro pound, I have a downward bias. The euro Kiwi, a downward bias. The euro Aussie, a downward bias. The euro US dollar, a downward bias, and the pound US dollar, an upward bias. So, and now I can come back to my MetaTrader platform. And then, so let's have a quick check. I have set upward for the pound yen. The pound yen is going upward. Downward for the euro pound. Downward for the euro kiwi. So for the moment, but we have to look to a larger complete choppiness, so not really significant. Downward for the euro Aussie. Then downward for the euro US dollar. And downward for the upward, sorry, for the pound US dollar. So what seems clearer for the moment are the pound US dollar and the euro pound. So down the euro pound and up the pound US dollar. And so this is what I will possibly consider. And so what I will do is I will widen my two charts for these two pairs, and I will wait for a valid entry setup, so a short entry setup on the pound, on the euro pound, and a long entry setup on the pound US dollar. And we can see that the technical trends are already in agreement with the global context bias I have just explained so a few moments ago. And so technically what I need to do is to wait for the euro pound for a pullback, and for the pound US dollar a pullback too, in order to have a valid entry setup, which will be in both cases a setup we will call a REMO, an ETF REMO. The MOE means momentum entry, and REMO it's a momentum resumption entry for a trend resumption. What I'm going to show is the MAX ETF primer level, so which is a simplified version of the MAX, which contains just a few of the entry and the exit setups, not all the tools we have at our disposal. And so it may require perhaps some time before having a valid entry setup. In the meantime, we can always check the other pair, of course. So the pound yen, my bias is long, so but we still have to wait, also to wait for an entry setup. The euro kiwi is completely choppy. The euro Aussie is rather choppy, so I will forget them. And the euro US dollar, so is also rather choppy, so nothing to change in the pair we have to consider. Now, when I say an entry setup is a set of conditions which combine several types of conditions. The first type of conditions is a technical analysis condition. So this means that the price must present, or the chart must present a valid setup with some conditions with the indicators we are using. Then we have to consider also the trade risk aspect. What is the risk we associate with the trade? Is it, for example, 2% of the trading account? Is it 1%? It is 0.5%. So, and this is relevant to each trader. Each trader must have his or her own zone of comfort for the risk associated with the trade, as long as that risk stays reasonable. So I consider taking more than 2% per trade as a risk is way too much. Because the problem is even if we have a good winning rate with the MAX, 70–75%, sometimes even more, depending on the time frame, depending if we are using or not the global context bias. This means that because we don't have a 100% winning rate, sometimes we are facing losing streaks. And with a 70–75% winning rate, the losing streaks we must always expect are losing streaks made of 4 to 10 losing trades in a row. 4 to 10 losing trades in a row, which seems a big size for a losing trade, but this is the reality of trading, and this is what you will get with such a winning rate. So don't be surprised if for your own system, if you are using a specific trading system with a similar winning rate, you will sometimes face such kind of losing streaks. And so this is why, in fact, because these losing streaks create drawdowns, of course, the drawdown need to stay as small as possible in order for them to be recovered rather quickly. And this is why we have to use a rather small risk per trade. Now, the advantage of the Max ETF standard, so the next level, is we can make scale-ins along a trend. When we catch a trend, we can progressively add to our initial position in order to build a larger position while still controlling the risk. Because making a scaling, so adding to the position, adds some risk to the new position, and this risk, which can increase, must still be controlled. And we have specific procedure to control the risk on the position we are handling, and which may possibly grow over time as long as the trend is valid. So, and so the technical analysis is one of the pillars of the MAX. The trade risk management is the second pillar of the MAX, and the third pillar of the MAX is the global context. Understanding the global context tells us in which direction it is better to trade, and if the understanding of the context is correct, because sometimes we may miss some element, of course, nobody is perfect, but if our understanding of the context is correct, so the winning rate can reach 90% and sometimes even more than 90%. Moreover, when there are important factors driving the market which influence importantly the market, we may catch nice trends. We call them true trend, and these true trends happens on average between 2 and 4 times per week for each pair. And it is very interesting to catch these trends because they will provide lots of profit. So with reward to risk ratio typically between 5 and 10 hours, and sometimes even much more than 10 hours. Not every day, of course, but sometimes this is what we will get. Now on the euro pound, the price has made a pullback which is deep enough. So this means that if the price resumes, in fact, the downtrend, we will have most probably a valid entry setup. And I say most probably because it's not because we have a potential entry setup that we have a trade. There are conditions to be fulfilled. And so when this will happen, so I will have to check if the conditions are appropriate. If the price continue to make a pullback on the pound US dollar, a little more, so we will be also in a good position to have a possible valid entry setup on the pound US dollar. Of course, because I have to explain what I'm doing, so I limit to just 2 charts. But when I trade live, so because I can concentrate without having to give explanation, I may trade 2, 3, 4 pairs simultaneously. And this is why on my screen I always display between 4 and 6 charts in general, sometimes up to 8, but never more. Otherwise, when I have to check all the charts at the same time, I don't see enough bars on the chart. Now, in order to handle the trade, we use a tool, an EA, Expert Advisor, which is called the Max Trade Monitor. Okay, we have a pullback deep enough, so I will set the Max Trade Monitor first of all on the pound US dollar because it seems to be the most interesting pairs. I will use a 1% risk, so that way I will not necessarily annotate the order. OK, and OK. And I will explain in a moment what we have on these two panels, and I will put also the Maxwell monitor on the euro pound. But the euro pound is becoming less interesting now. So let me see if there is something better. Pound yen, not necessarily. Euro Kiwi stays a nightmare. The Euro Aussie also for the moment. And the Euro US dollar still in a choppy mode. So let's stay on the pound US dollar and the euro pound. So let's put the Maxwell monitor on the euro pound too. And I'm going to explain, while I'm waiting for an entry setup, I'm going to explain what we have on our different panels of that expert advisor. The small panel is the button panel, and this button panel helps to open the trade, to handle the trade, and with a global stop loss. This stop loss is that dashed horizontal red line. We can move with the mouse, and we have a specific rules to adjust the stop loss on the chart. Of course, I will preset my stop loss in this area for the euro pound, and in this area for the pound US dollar. It's a bit too large. I will readjust it if necessary. And then, so in the button panel, we have a buy or a sell button. The button is labeled sell if the stop loss is above the price, and it is labeled buy if the stop loss is below the price, because the EA makes the assumption that depending where the stop loss line is, the order will be a buy or a sell. Then we have a button for an MX and a button for an XXX. An MX consists in closing half of the trade size, and XXX to close the entire trade. Indeed, whenever we open a trade, the trade is supposed to be made of 2 units, and you will see what units means. And when we make an MX, in fact, we close 1 unit. And when we make an XXX, we close all the remaining open unit on that pair. And then we have the information or the data panel, which contains 2 columns, one labeled global and one labeled symbol. The symbol column gives information about the pair we are trading at that moment. So for the pound US dollar, so this table will give the information about the trade on the pound US dollar, and I will put them in the following order. It will be easier for me to read the data. And the global columns aggregate all the trades when there are several trades open simultaneously on different pairs. For example, if we have a trade on the pound US dollar and one on the euro pound, so these 2 trades will be shown individually in the symbol column, but globally in the global column. So I have to pay attention here for the pound US dollar. I will set my stop loss in this area because we may have possibly an entry setup. In 30 seconds. A few seconds. No, we don't have a valid setup. So this is not a valid entry setup. So in 5 minutes, perhaps, with the next candle. So now in the data window, we have important data. The first important data is here the line labeled ESL result. ESL is our stop loss. ESL means emergency stop loss. And this is the result when the trade is open, of course. We will get if the price hits the stop loss. I have taken a risk of 1% for each trade. So you will see when I will open the trade, the risk will be 1%. So the result on the ESL will be minus 1%. And of course, when I will adjust the stop loss, when I will tighten the stop loss, that risk will decrease until if the market is with us, until we will get a risk-free trade or a guaranteed profitable trade. Then the second important line is the XXX profit, which will be the result of the trade with a profit or with a loss in the case we close the trade on the present price. But you will see that when the trade will be opened. And then we have some intermediary informations like what is the risk on the remaining risk on the opened unit, what is the profit which has been taken on the closed, on the potential profit on the open units, and what is the banked or closed or profit taken on the closed unit as a percentage of the trading account or as a number of pips. And we have also the total number of opened unit. We have the spread and the size of the stop loss. So these are the main informations that EA will give, and they give very important informations in terms of trade risk management. You will see that if I have the opportunity to open a trade on the pound US dollar in around a little less than 3 minutes. So I was explaining that the entry setup corresponds to a set of 3 types of conditions. So the technical pattern of the price and the indicators are showing. The risk aspect and the global context aspect is the trade in agreement with the global context. So this is the entry setup. And when all the conditions are fulfilled, so we have a trade and we have to open the trade. Now, when we are in a trade, we have to consider how to exit the trade, how to close the trade. And the close of the trade is made through exit techniques, so exit setups. An exit setup is a set of conditions telling us that we have to close at least 1 unit. So we have to make an MX, or in some circumstances, we have to make an XXX. So now, in terms of exit setups, we have many types of exit setups. We have exit setup based on indicators, for example, based on the store RSI indicator shown here in magenta on my screen. We have exit setup based on pure price action. In the presentation I have made a few days ago on a Saturday, so the long bar is an example of such a price action exit technique. We have exit technique made of a combination of price action and some indicators. Then we have exit techniques also based on what I call critical time period during the day, because there are some moments, an example of such a critical time is a news release, but also an open or a close of a market may constitute such kind of event, critical time period. And then we have exit technique based on a trend reversal or a movement invalidation or movement exhaustion. So movement trend reversal, movement exhaustion, movement invalidation, so which are exit techniques calling for an XXX when we have to scratch the entire trade, whatever the number of open units we are left with. What is important to understand here with these exit techniques is an exit technique is never a way to predict what the price can do. For example, I have explained that one of the exit techniques we use with the store RSI is the divergence. Yeah, this is perhaps a setup. No, it is not a valid setup. No, it is not a valid setup. We don't have all the tumblers in agreement. A tumblers in our jargon is a set of valid, positive, favorable conditions. And so we don't have that so for the moment, so we still have to wait. And you can see that the price is making some, is still in its pullback. For the exit technique, so what I wanted to explain is, so an exit technique is never a way to predict what the price can do. An example of an exit technique, as I was explaining, is the divergence between the price and the store RSI. It's not because we will have at some point a divergence that this will predict that the price will reverse or the price will make a pullback. This is what we observe very often, but this doesn't mean that we can always predict that this will happen. However, our exit techniques are used in a complete different way. When we are in a trade, for example, a long trade, let's suppose we would be in a long trade with the pound to US dollar. As long as the price will move in our favor, we are making a larger and larger potential profit. But it is a potential profit because as long as the trade is not closed, that profit can disappear. And indeed, when the price begins to pull back, we never know how deep the pullback can be. It can be a small pullback, or it can be a deep pullback, or it can be a trend reversal. But anyway, whatever the type of pullback, with the pullback, we always see a portion of the profits evaporating, so disappearing. And so a pullback in a trade is an element of risk. Whatever the reason, there is always a reason why a pullback is appearing, perhaps some profit taking, perhaps some important level the price is reaching, which will call for, which may be, for example, a resistance level, or in this case, in the case of a long trade, supply level. So we may have the price reversing for some reason, and this pullback is a risk, because with the price or with the profit disappearing, so we can possibly see the profitable trade turning into a losing trade. And so we have to control that risk. And so the exit techniques we are using are, in fact, a way to quantify when the risk is becoming too much important. And when the risk becomes too much important, we have to take the decision to reduce the risk by closing one units or by closing all the open units, depending on the type of exit techniques we have. And I hope I will be able to illustrate that so in a short moment. Otherwise, I will force the trade just to illustrate the process. In the meantime, let me check the pound yen. The pound yen may perhaps be interesting. No, not really. The euro kiwi, it stays a nightmare, not a good one. The euro Aussie still in its choppy mode, and the euro US dollar still in its choppy mode too. I mentioned the expression choppy mode. The choppy mode is one of the price modes we consider also in the way the price is moving, and the choppy mode is an important, the price mode constitute an important concept within the MAX. It corresponds, in fact, technically to the market conditions. And we have 5 types of price mode. We have what we call the trend mode, then the counter trend mode, and the consolidation zone mode. And then we have the choppy mode and the spaghetti mode, or the spaghetti zone. And each of these price modes represent a certain type of market conditions, and all our entry setups and sometimes our exit setup must take into account these price modes. We do not open a trade the same way when the price is in a trend mode or in a consolidation zone mode. An entry setup in a trend mode corresponds to a trend resumption or a trend continuation. An entry setup in a consolidation zone mode corresponds to a breakout entry setup. And so, in fact, our different types of entry setup combined with the price mode correspond to several types of trade style or trade strategy, in fact. I may possibly consider the pound yen too, because the euro pound seems to change its mode of moving. The pound and the euro is gaining some strength. The pound is the strongest currency for the moment, but the euro is gaining strength and is not too far from the pound. So the euro pound will be a little more difficult to consider. The pound yen is still interesting because the pound is strong. The yen is not very weak, but weaker than the pound. So going long on the pound yen, so which was my bias, may be interesting. So what I will do, I will remove, or perhaps not. No, I will stay on the euro pound. I like the euro pound because the euro pound makes smaller movement generally, but smoother movement. So let's stick on the euro pound and the pound US dollar. So on the pound US dollar, we may finally have an entry setup. So here. So in 3 minutes. We have plenty of time before the next news, but the news is on the euro. And so this type of news, because it is on the euro, in the case of a big surprise, may impact also the pound US dollar. But this news is due at 12 on this platform. And on this platform, for the moment, it is 10:52. If we have that end result, we will be just in time to accept that setup. If all the conditions are fulfilled, we will have still time enough to consider that trade. It will be a bit limited because we will be left with just half an hour to 3/4 of an hour before to consider to scratch the trade. But I would like to illustrate the trade risk management anyway. I would like to consider the pound yen. I will remove the euro yen, the euro pound here. So remove. And I will take instead the pound yen. But the setup will not be valid. All the conditions are not fulfilled. On the pound US dollar, it should go a bit higher. No, we will not have a valid setup. Unfortunately. What I will do is I will force the trade. I will force the trade on the pound yen. So normally all the conditions are not fulfilled. This is not a valid entry setup in 15 seconds now. Most probably it will not be a valid one, but I will force the trade just to illustrate the process of the trade risk management. Okay, so I will make my entry around that level. It will be a buy. So if the price reaches my blue line, I will make a buy. My stop loss is here. And this tool, the Max Trade Monitor, calculates automatically the trade size with the position sizing concept. And the trade size is defined by the risk associated to the trade, which is 1% of the trading account, and the size of the stop loss. For the Max members in the room, so this setup, this blue bar is not a valid setup. We don't have enough favorable tumblers. We have 1 out of 3 tumblers in agreement, so it's not enough to have technically a valid entry setup, but I will force the trade if the price follows through and hit my entry level, just to illustrate the trade risk management process. Now the price is continuing its pullback. I'm just curious to see what the euro pound is doing. So no entry setup yet. The price is in a trend mode. So we will have what we call a REMO in a trend mode. Okay, I open my trade. So just keep in mind, it's not a valid trade, but because we are now limited in terms of time, I would like, because we are approaching the time limit of 1 hour before the news release, and remember, I have said when we are in a trade 15 to 30 minutes before the news release, I will have to scratch the trade, so before facing that news release. Now you can see that the trade has been opened. The risk is minus 0.94%. This means that if the price reverses and hits my initial stop loss, I will lose minus 0.94%, so a little less than 1%. If I close the trade now on the present price, I will make a small profit of 0.06%. So the number given on the XXX profit line. You will see also that whenever I will adjust the stop loss, I will tighten the stop loss, so the risk will decrease. And when I will make an MX, so closing 1 unit, I have 2 open units. When I will close 1 unit, the risk will decrease too. The unit can be closed with a profit or with a loss. It depends how the close is made. And so this means that now that I am in a trade, I will have to wait for every exit setup and evaluate every exit setup in order to take or not the decision to close 1 unit. We may have possibly also a valid entry setup forming in 30 seconds now on the pound US dollar. It is a little bit too late to consider that trade because we are left with just 1 hour before the time limit to be allowed to open a trade. But I may possibly also force the trade on this example just to have 2 trades open simultaneously to show you how the global column will show the addition of the 2 trades. Yeah, this was a valid, and so this was a valid entry setup. Yeah, and so I will make my entry here at 131,141. So on this level, if the price comes back on this level. Now, when we are in a trade, so I have said we are looking for all our exit setups. And what we can do is also the following. We can apply what I call a discretionary decision. And the discretionary decision consists in the following. When I will have an exit setup, I have the choice either to take, so I have the entry, so I will make the entry. So now I have two trades, and you can see that the risk for each trade is a little less than 1%, but the total risk is so a little less than 2%. So when we will have an exit setup, I have the choice to either apply the exit technique, the exit setup, if all the conditions are fulfilled for the exit, or I can also decide not to make that exit. And my rule is the following. So because I'm using a small risk per trade, just 1% and sometimes even less, I will not make my MX until that MX gives me a profit large enough. And by profit large enough, I mean a profit equals to minimum half size of my initial stop loss. So my initial stop loss has a size, as you can see here, of 32 pips. I want a minimum profit of 16 pips. 16 pips plus 1 pips just to be break even, and it happened this corresponds to this level, which is a max price level. These max price levels are possible supply and demand or support and resistance levels, which are defined every weekend, every Saturday. It is a pure coincidence that this max price level corresponds to the minimum level of the profit I want to have on an MX with my discretionary decision. But this is what I will apply just to show you that sometimes this works fine, and sometimes this will give me a larger loss. So this sometimes happens, but globally with that decision, so my global profit increases over time. I have made a deep statistical analysis on several years of my trades to see, to observe that phenomenon. So. Now, one way we have to adjust our stop loss is using this line, which is called the max price channel. It is that orange line when the price is going upward, or the pink line when the price is going downward and we are in a short trade. And so I adjust my stop loss following that line, but still leaving some distance between that line and my stop loss. And I always wait for the bar to close before adjusting my stop loss. Yeah, Paul, we need to give a name. I'm not talented to find such kind of names. Sometimes it's good to have some fun name, but I'm not very talented to find fun name. So if you have some suggestions, you are welcome to make some suggestions. Now, if we consider each trade individually, you can see that the pound US dollar has a very small profit. The pound yen a small profit for the moment. The pound yen has a small profit, potential profit. The pound US dollar a small potential loss. But when we combine both together, we are for the moment at break even. Yeah, Chris is the best man for the task. Death, plunge, or pit of despair. Now, the main feature or the main skills a max trader must develop is the following, and this is why I always note on my chart patience and discipline. So there is always volatility in the market. Okay, there is always volatility, and so even if we have a long bias for the two pair, so long on the pound yen, long on the pound US dollar, based on the global context, sometimes the price can make some pullbacks. And there is a tendency for many traders to begin to panic when the price is making a pullback. And this is why it's not so easy. Sometimes it's hard to trade. And the trader must have the patience for the trend to develop, for the trend to unfold. And so the trader must develop also the courage to stay in the trade even when the price is making some pullbacks, because a pullback is the natural movement along a trend. Along a trend, there will be always traders banking some profits or closing partially their trades or closing in panic their trade if they are in the opposite direction. So now for the pound US dollar, I will set my minimum level for a profit. My stop loss was at a distance of let's say also 32 pips. So 16 pips, and 16 pips will be here, let's say at 132.305. 132.305. No, that's impossible. 332. Oh, 305. 305. In that area. Now, whenever a candle closes, I always check if I can adjust my stop loss by checking where my orange line is. And I can see now that the stop loss is at some distance from that line. And for the price, my stop loss is very far. So I can adjust my stop loss in this area. We have a rule to adjust the stop loss. So I will adjust in that area, and you will see how the risk on the pound yen will somewhat decrease. Okay. Similarly, here on the pound US dollar, I can also tighten a little bit my stop loss. I will tighten it just below the MO line, which is this gold moving average. And so my risk has decreased to minus 0.63. Globally, now the total risk is less than 1.5%. So I have reduced my risk by more than 1/4 globally. Now, because the time is flying, if the price reaches here my minimum level for a profit, I will make an MX. I will not wait for an exit setup. I will make an MX right on this level if the price reaches that level. So I'm ready to make an MX. It's just a question of 1 pip. And similarly for the pound US dollar. And because the price is moving in my favor for the moment, and the max price channel is still going upward, I will have most probably a possibility to fine-tune a little bit my stop loss at the close of this blue bar. Okay, now a new bar has closed on each chart. On the pound US dollar, I can tighten a little bit my stop loss here, and in the pound yen, I can tighten the stop loss also a little bit, and you can see that progressively the risk is decreasing, and now my global risk is only minus 0.2%. So I have almost divided my risk by 2. And for the moment, I still have no exit setup, so we are forced to wait. Yeah, it's a good idea. Have a coffee, Boldev. Yeah, that's a good idea. A coffee with a small piece of chocolate. You remember in our bonus session, the scrolling party of Saturday, I was running out of chocolate. It was dramatic for me. Fortunately, yesterday, I've been able to buy some amount of chocolate. So now I have a good stock of chocolate. I feel much more comfortable. Now you can also see with the panel here, the result panel, especially in the global column when you have several trades running simultaneously, what is the profit you would make if you close all your trades at the present time. You see here 0.6% profit. If you understand the concept of compounding your result, if you day trade every day of the year, okay, which is not necessarily obvious, but let's suppose you are able to trade every day of the year, and you are able to produce every day on average, whatever the number of trades you take, but on average, a total profit of just 0.5% per day, and you compound your result in 1 year, so starting at the beginning of the year, at the end of the year, you will multiply your account by 3. With just 0.5% per day. This means that when you achieve some result you feel comfortable with, you can also decide to close all your trade and to close your session. You have made your day and you can dedicate the rest of your day for something else. Boldev, you say that you love a bite of nice dark chocolate with strong coffee after dinner, but why one bite? Several bites? Now, if this red candle closes as a red candle on the pound yen, we will have, in fact, an exit setup triggering on the Stochastic indicator. And as you can see, it will be a divergence because the price is making higher highs and the Stochastic is making, if this is confirmed, of course, but this is why we have to wait for the close of the bar, lower highs. And using my discretionary decision, because the profit will not be large enough, so I will skip that exit setup. But of course, the choice is for the trader to exploit that exit setup. And if the conditions to close one unit is fulfilled, so the max trader can close one unit, reducing the risk on the trade. Yeah, Jason, I said chocolate indeed. Yum, yum, yum. Now, let me illustrate how a max trader applying that exit technique, which is so a divergent, and we like to annotate the chart correspondingly. So here we have a basic divergence, or a div. But a divergent does not mean necessarily an exit. The exit would be made somewhere in this area. I'm going to show you where. If the price comes on this level indicated by this blue line, so normally we can close one unit making an MX, which I will not apply because as I have said, I have chosen to apply my discretionary decision, so closing one unit on or above this level indicated by that blue dashed line on the pound yen or the blue straight line on the pound US dollar. And so for that, I accept to take an additional risk in my trade because it's very possible that the price will reverse and will go against me. If I close one unit on this level, at least I will protect a small profit, and this profit will contribute to lower the risk on the pound yen pair. It's evening in Sydney. Oh yes, it's evening in Sydney. Yeah, that's correct. So perfect time for chocolate, Jason. So enjoy your chocolate. Now, in the meantime, with each closed candle, I can check if I can adjust further my stop loss. Not with just a little bit, perhaps, so here. So reducing a little further the risk on the pound US dollar, and you can see I have almost divided the risk on the pound US dollar by 2. And on the pound yen, unfortunately, I cannot tighten further my stop loss, at least for the moment, because now the max price channel is going flat. Now with the max standard level, we have other rules, other complementary rules to adjust the stop loss and to fine tune our risk. And sometimes we can further tighten the stop loss. What I propose to do also is to draw a vertical line 15 minutes before the news release, just to remind me that I will have to close my trade 15 minutes before the news release. So when the price will reach that white vertical line, if I am still in the trade, I will have to make an XXX, whatever the number of units on these trades. And similarly, of course, in the pound US dollar. Just to show you the size of these two trades, I'm going to show you the terminal panel. And you can see that for the pound yen, the size is 28 microlots, and similarly for the pound US dollar. So a little more than 1/4 of a standard lot. So, and this is the result for the moment of the profit, which is made on an account of a little less than $10,000, $9,000. And when I will close one unit, you will see that the size will be divided by 2. Okay, Jono, have a great rest of the day, a great rest of the week also. And see you next time in one of our max activity. Now, a good point is if the present candle, which has just opened, stay as a blue candle or closes as a blue candle, because the max price channel is again pointing upward, I will be able to tighten a little further my stop loss on the pound yen, and so reducing further my risk on the pound yen, and so the global risk on the two pairs. You can see in this example, because the price has not reached the level illustrated by this straight line, blue line. So the max trader applying the exit technique in a very strict way would still be in the trade, so would not have made its MX. And so waiting for the next exit setup. Now let's see if the price will succeed to reach my level here where I will make an MX. I will force an MX. It's not an exit technique because I have said the MX must be made on or above that level with an exit setup, but because we are limited in time, so I will force an MX on that level just to show you how this will reduce the risk on this pound yen trade. Now, when I have time, when I'm in a trade, when I have time, so regularly I also check in Forex Factory and other media in the news panel. I also check some headlines to see if there is an event or an information which can influence the market. Most of them will have no influence, but from time to time, so we may have an information which is interesting to consider, which can change, in fact, the market sentiment. In my bias, as I have said earlier, I had to change the bias for the bonds market. So I will do that now very quickly. So both down. That way my sheet is complete now, and so I can come back on my trades. With this red candle on the pound US dollar, so if it closes as a red candle, we will have also a divergence between the price and the store RSI. So this will be an exit technique which can be applied exactly the same way I have illustrated here with the pound yen. But because the exit will not be made on or above my minimum profit level, so I will ignore, or I will perhaps apply it just to illustrate how this reduces further the risk on the trade. Attention here for the pound yen. We are at 1 pips from the level, and sometimes 1 pips it's hard to achieve. But now I can tighten further my stop loss around this level, just below the small plateau made by the max price channel, now reducing my risk on that pair to less than 0.5%. And so my global risk is just now 1%. So I have divided completely my risk by 2 on the 2 pairs. So indeed, this red candle is an exit setup bar for the pound US dollar, and I will make my exit if the price continue to drop at 205.19. here on that level. And observe the risk on the pound US dollar, which is minus 0.51%. And if I have the possibility to make the MX, you will see how the risk will drop a bit further. Okay, I make an MX. So closing 1 unit, you see I'm left with 3 units, 1 on the pound US dollar, 2 on the pound yen, and you see that the risk on the pound US dollar has dropped to minus 0.18%. So I'm not too far away from the break-even situation in the pound US dollar. And my global risk has dropped to minus 0.68%, 67%, it depends on how the number have been rounded. So here I have to pay attention to make my MX also. I make my MX, and you can see that the risk on the pound yen also has dropped to minus 0.49%. So that's strange. The number has not been updated yet. It should be minus 0.24%. And globally, my remaining risk on the 2 trades is minus 0.18. We are progressively approaching the moment when I will have to consider to scratch the 2 trades. So at 45, so 45 will be in 17 minutes. And you see this jump in the pound yen. So this shows that the volatility is increasing. This is sometimes, very sometimes, so very frequently, what we observe before a news release. In the 5 to 10 last minutes before the news release, especially when it is an important news release, we may have an increase in the volatility in both sides. And this is why, in fact, and because we don't know also in which direction the news will be, it's extremely prudent and wise not to be in the trade in the last 15 minutes before the news release. Now the price is nicely moving in our favor. You can see how the profit is nicely increasing on the pound yen. The pound US dollar should follow very soon also, because the 2 pairs are usually correlated. Now the bar has closed, and so I cannot adjust my stop loss on the pound US dollar, but I can certainly on the pound yen. And I will set my stop loss on this level approximately. And you can see that now with the pound yen, I'm break even. I have no longer risk on the pound yen. As soon as the ESL result becomes green, this means that I begin to lock some profits on the pound yen. So now I have a guaranteed profit on the pound yen, and you can see that my global risk with the 2 pairs is only minus 0.12%. So I'm not far away from the break-even situation with the 2 pairs. And I have still 1 open unit, so on each pair. So this means that virtually I'm guaranteed to close the 2 trades with the profits, because very soon I will have to close the trade. Another point we have with the max in terms of trade risk management is now the stop loss size is 42 pips. My initial stop loss was, if you remember, around 20 pips approximately, or 30 pips, something like that. When the distance with between the price and the stop loss becomes way larger, we have, as I have said, with the max ETF standard level, other rules to adjust the stop loss. But when we are sure that our XXX is due, and here because we are left with 1 open unit on each pair, but also because we are facing the time limit before a news release, we can tighten the stop loss further. And what we can do is to make it closer at a distance of approximately 20 pips. So I can tighten my stop loss in this area, so just below this small low, banking more profit on the pound yen, and now making my global position also risk-free. And I can do that also with the pound US dollar. So I will adjust my stop loss around this level approximately, so this level, banking also more profit on the pound US dollar, and you can see that I am virtually break-even with the pound US dollar too. I will move a little further my stop loss just to make it break-even, just break-even. And I am guaranteed to make at least 1/3% profit if the price hits my stop loss. But normally I should make a larger profit. Now here I will close the second unit on this level right now, because this is a long bar. This is a long bar, and as I have explained in our presentation webinar, so a long bar is always a nice opportunity to bank some profit. So the pound yen trade is closed with a little more than 0.5% profit, and the pound US dollar trade is at worst break even. And so let's see if the price will hit the stop loss, closing the trade at break even. It is not very usual to see the volatility increasing before the time limit. This sometimes happens, unfortunately, but we have to do with that. So the price is almost on the stop loss here on the pound US dollar. And the trade is closed. You see the trade is closed with just a small profit. And so for the 2 trades in less than 2 hours, so the profit has been a little more than 0.5% for just a 1% risk for each trade. So not a big movement, because of course this trade has lasted just a little less than 2 hours, but with the max ETF standard, we would stay in the trade because in the meantime, we would have had an opportunity to make at least one scale, at least in the pound yen, most probably. And so we would catch larger profit when we don't have to consider a news release. Because of this news release, even if the price continued to trend, so we would be forced to close the trade and then reconsider to open the trade after the news release. But you can see here these two examples anyway. The technical trend was long trend, so an uptrend, and my bias, I have announced my bias at the beginning of this session, so I was considering to go long on the pound yen, and we can see that again on my sheet for the bias. So you see the pound US dollar long, the pound yen long. These biases are defined with all the analysis I make before my trading session. A large portion of my analysis are made before the London Open, and the last elements are considered when I update my sheet here for all these biases. And so when we consider the trades in agreement with these bias, so the winning rate jumped to 90% approximately, and sometimes even more, 90-95%. We miss sometimes some nice movement, but we still have enough trades per day to make very, very nice results. You see here on the pound US dollar, I have tightened my stop loss a little too much. If I would have kept my stop loss a little below, but we never know that in advance, I would still be in that trade and I would catch a larger profit on the pound US dollar. But anyway, more than 0.5% in less than 2 hours for these two trades before an important news release. I'm happy with that. After the news release and after the US Open, there will be other opportunities to consider. Okay? Any questions on what you have seen on these two trades? Yeah, Boldev, and with the sum, you should have obtained a better result, most probably a better result with the max ETF sum. The max ETF sum is another level of the max, which contains the entire methodology of the max ETF standard, but we go much more into the details in the price action itself using other types of chart like a constant range bar chart or Renko bars, so these type of charts. You can see that on the pound US dollar, should I have adjusted better my stop loss, but this is what trading is. The price now was reaching here my minimum level for an MX, so it would have been a good point to make an XXX here. But anyway, we must never regret the decision we take because the trade risk management is an important aspect in trading. The trade risk management, when used properly, will help you to, first of all, avoid many losing trades, and secondly, when you are in a losing trade, to avoid big losses. And this is fundamental. If you succeed to avoid big losses, then you have made half of the path, half of the way to become consistently profitable with your trading approach. Oh yes, Boldev, send your chart. Send your chart. Yeah, skipping the scaling because of the news. Yeah, indeed. We didn't have time enough to make scalings. In fact, with the news because of the news. Just to show you some of the bias of yesterday, where are they? They are here, max intraday bias. Yesterday was the November 9th. I have made some screenshots. So my bias on the Aussie US dollar just after the London Open. The London Open was in this area, was a long bias, and you can see that with some patience, so the price has nicely moved upward. So this was on the Aussie US dollar. On crude oil, my bias was long. Look the nice movement the crude oil has made. The Euro bond, my bias was long, but suddenly the market has reversed. Yesterday, the investors have decided to be euphoric on the stock market for some reason. I will not explain the reason here, but all the stock market have moved nicely upward, and so the bonds market has dropped. So this is the very important European bonds. The Euro Aussie, my bias was short, nice downtrend. Euro pound, my bias was long. This was a miss. So just a small winning trade soon after I have established the bias, but it was a complete miss for the rest of the day. This sometimes happens. Euro yen, my bias was long, perfect bias. Euro Kiwi, my bias was short, perfect bias. Euro US dollar long, it was a small success. I have missed the drop here. Pound Aussie, my bias was short, a nice short bias during the European session. Pound CAD, short bias, nice bias. Pound Swiss, a complete miss. So this has happened too. So 3 miss out of all of them for the moment. Pound Yen, nice uptrend. Pound Kiwi, nice downtrend. Pound US dollar, uptrend. The DAX, the German DAX, nice up movement with the correct bias. The Kiwi, the Nasdaq, sorry, my bias was up. It has been partially a success. So Kiwi US dollar upward bias, a nice one. The S&P 500 upward bias, nice one. FTSE 100 in UK, nice upward bias. The US Treasury bond, this was a complete miss, so because the bond market has reversed with the stock market going upward. US dollar CAD short bias, nice drop. US dollar Swiss, it was a miss. US dollar yen, nice upward bias. The Dow Jones, nice upward bias. Gold, it was a miss. Aussie US dollar, we restart from the beginning. So you see, out of 25 instruments, so 7 was in the wrong direction, and 18 in the right direction. So 18 out of 25 represent, so 72% winning rate, success rate in the definition of the bias for all the 25 instruments I consider every day. So, and you can see the price continue to move in the direction of the bias. The price is reaching another max price level here. It is a combination of 2 levels, and you can see how the price is reacting on that level. So very, very nice. If we are still in the trade now, should we still be in the trade now? So we would consider to close the trade because we are approaching in a few seconds, in 30 seconds approximately, the limit when we will have to close the trade with a nice profit, an important profit despite that. So, but you get the idea of the trade risk management we use within the MAX. So patience and discipline is key, because it concerns all the aspects of trading, the right price pattern, which is a set of technical conditions, the right level of risk for each trade in order to control any drawdown when we have losing trades, and the global context, so trading in agreement with the global context, providing we understand correctly or largely the global context. So in order to trade only in the direction of the global context, which is a set of important driving factor of the market. And it's not a surprise if in my bias, I will show you that again, I consider several types of market: the forex market, the stock market, the commodities market, and the bonds market, because all these markets are interrelated. They are all linked together. There are some interesting positive and negative correlation between these markets. And when you see this kind of correlation, for example, it's very often the case that when the stock market is going upward, the bond market will go downward, and vice versa. If we observe now, for example, the S&P 500, let me show you the S&P 500, which is this chart here. Show chart window. We will see that indeed the S&P 500 index is going upward. Similarly, if I look for the Dow Jones, nice upward movement. The Nasdaq is here, see, upward with some reversal now. The DAX upward with a nice violent upward movement, and the FTSE 100 a nice, very nice upward movement. So you see how the market, the stock market and the bond market are usually negatively correlated. And this is why, so when you have that more global view of the different markets and you understand their correlation, so you can have much more confirmation and so much more confidence when you take a trade in a very specific direction. So, any questions about what I have illustrated today? The vaccine caused the misses. No. I will not take the vaccine when the vaccine for the COVID will be available, Chris. This is the decision I have taken. I will not take the vaccine for the COVID. I have no confidence in a fast vaccine, and the coronavirus is very similar to another seasonal virus. Chances are high that next year it will be different, so I will not take the vaccine. I prefer to make my immune system stronger by having, by eating healthy foods, by making sports, having a healthy life. But that's my personal decision. But I'm not against the vaccine, because some vaccine I consider they are important, and so I'm not against the vaccine. But in this case, the COVID, yeah, it is developed a little too fast for me, and so I'm not sure the test will be completely reliable. And so if it's not reliable, it may be dangerous. So personally, I will not accept the vaccine. So if you have questions, so feel free to post them. And so we start the next course with the Max ETF Primer and the Max ETF Standard level. So this Thursday, it will be each Thursday for the next 7 weeks. There is one exception, because we will be approaching Christmas for the last session. So the last session of the Max ETF Standard course will be on a Monday, but you will have the complete schedule if you enroll into the course. And just to remind you the conditions of the course, so this is just a small reminder of the calendar and of the price. The webinar special price still apply today, so because you have decided to participate to this open house session. This is true also for those who will watch this session through the video, because the session has been recorded and the video will be made available. And so you may still profit of the discount by having subscribed to this presentation today. If you have any questions later today, tomorrow, after tomorrow, you can always contact us either with an email or through Skype, and so we will be glad to answer all your questions. Okay. Let's have a last look on the chart to see what the price is doing. I'm curious to see what the price will do with the news release, but now let's observe the volatility we will have now in the last 10 minutes before the news release. Oh, thank you, Chris. Thank you for your chart, Boldev. Yeah, a point which is a great point in the Max community is we share our charts. And so any members can always send his or her chart to have some comments, eventually to have some comments. And so we are always glad to comment on the chart and then to share the chart between the members, just to show that success is possible with the Max. And we have a lot of our students now which are profitable with the Max, and we are glad for that. So the news is due in 8.5 minutes. So 8 minutes for the news. And when I am forced to wait, this is an occasion, in fact, I use to check in the Forex Factory if there are some new information. I update this news panel, this news page, just to see if there are some information which may have an influence in the market. I ignore any personal opinion. When someone gives an opinion, so I have a tendency to ignore that opinion. I just focus on the factual information. So now the news panel of Forex Factory is a good source of information, but there are a lot of other sources of information, and websites I like to check regularly are Bloomberg, Reuters, the Financial Times, the Wall Street Journal, and some other. But these four media, these four websites, and plus Forex Factory are the 5 most important websites I regularly consult. So, because they also have headlines which are updated regularly, and so I regularly check these headlines. But most of them are ignored. Of course, when it is just an opinion, I ignore the opinion. And then when we are approaching the news release, I switch on the Forex Factory page, and we see that we have the green button, which means that we are at less than 10 minutes from the news, which is so the German ZEW economic sentiment and the Euro ZEW economic sentiment. The ZEW economic sentiment is for the entire European Union, and the German ZEW economic sentiment is only for Germany. And both are important, despite the fact that they are in yellow. Unfortunately, the color code of Forex Factory is not always correct. There are yellow news which may be extremely important. There are red news which are not necessarily important. And so it's important also to know which news are really important and which one can be completely ignored. Oh, that's fine. You have made a +2R on the euro pound. That's good. That's good. The euro pound, you see the price has dropped based on the bias. My bias was short on the euro pound, and I can show that on the Google Sheet here. Euro pound short bias. So no lies. And in fact, when you can trade several pairs simultaneously, so it's interesting to trade them simultaneously, because if you trade simultaneously, let's say, for example, 4 pairs, if you are comfortable enough in a small time frame like the 5-minute time frame, you may have 1 pair going against you, you may have 1 pair ranging, and you may have 2 pairs going in your favor. And so this may be largely enough to make a good profits. Yeah, and the euro pound was a good pick indeed. The euro pound has often the advantage to have more regular movement, to have smoother movement. So now the size of the movement are smaller compared to a pair like the pound US dollar or the pound yen, but the p-value is larger, and so the larger p-value compensates for the smaller movement size. And that's a great point. And this is why, in fact, I like also to always consider trading the euro pound. It's a nice pair to trade. So 3.5 minutes for the news. What I'm going to do is I will remove the expert advisor on the charts. Remove, and I will tile all the windows to see how the price has moved. So my bias, if you remember, were long on the pound yen. The pound yen is going upward. Short on the euro pound is going downward. It was short on the euro kiwi, short on the euro Aussie, short on the euro USD, and long on the pound US dollar. So for the moment, so the 6 pairs are moving, so in agreement with the bias I have established just a few minutes after the London Open. But for some of them, the movement are choppy. For example, the euro kiwi, so we can see a lot of choppiness, and it's not certain that the price has left this choppiness. And for the euro Aussie also. And in the max ETF standard course and the max ETF prime course, we explain what a choppy mode is and how long a choppy mode can last. So, so we're a little less than 2 minutes for the news. Now let's switch on the calendar. Which should be right here. I have pushed on the button a bit earlier. So 1 minute and 20 seconds. One minute. Now, it's very possible that the economic sentiment will be negative or smaller, so worse than the forecast, and probably worse than last month, because the news on the economies in the European countries, in the European Union, so are not good. So the economies are really in a bad situation due to the COVID and to the measures the different governments have taken. So the confinement is always dramatic for the economy. Okay, now we are waiting for the update. It may take just some time before the numbers are updated. So we have 32.8, so negative, so less than the forecast. And for the European economic sentiment, and in Germany, we have also a negative number. So this should be bad for the euro this should be bad for the euro. So the euro should continue to weaken. And so we should see the euro Kiwi and the euro Aussie continue to drop normally. So this should be the normal behavior of the euro with the news, with that news, the news on the ZU. And so because of the Brexit, I'm not sure if the impact will be similar on the pound pair, and short also on the euro pound. Okay, so you can count that these three euro pair will continue to drop. Not sure that the impact will be negative for the pound, because with the pound we have the problematic of the Brexit, and so I will be less certain on the two pound pairs. So, because the pound is still very, very strong. It's the strongest currency for the moment. So, by the way, how can I get the bar size indicator? What do you mean by the bar size indicator, Zek? I hope I pronounce your first name correctly. What do you mean by the bar size indicator, Zek? To check if the bar is a long bar. Thanks, Zek. You can contact Chris, and because you are a Max member, so you will have the indicator. So Chris will send you the indicator. So contact him, send him an email, and he will answer you with the indicator. Okay. Okay, any questions before we wrap up this session? I hope you have appreciated the demonstration. So, and I will wrap up this session in 1 or 2 minutes. So if you have some questions, feel free to ask. Oh, thanks, Ingrid. Oh, thanks, Zach. I really appreciate. Oh, you know, it's indeed different to learn a trading system through the course, the video, and all the material, because in order to teach a subject, to teach some entry and exit setup, it is important to show most of the time by the book examples, and so we are forced to show past examples. But to really understand the concept of the max and how to apply them, the best way is to show them in live conditions, like I have done today, like I have made last week, in such a way that we don't have the hindsight of the right side of the chart, because the right side of the chart is unknown. So we are forced here to follow the rules. Okay, I see no further questions, so I thank you. It's a good time to wrap up this session. You will receive the video, of course. Some of you prefer to watch the video, so they are not present in the room, and it's normal because it depends of your constraints, but there is no problem. This is why the session is recorded. So the video will be made available in a few hours. I don't know how much time it will take Chris or Craig to produce the video, but it will be sent, so no problem. And you will also receive the invitation so to subscribe to our course. And so we will be glad to see you in the course starting Thursday, November the 12th, not the 5th. We have postponed by 1 week. So November the 12th at 3 p.m. New York time. The two first sessions. So the Max ETF Primer course is made of 2 sessions. The Max ETF Standard course is made of 7 sessions, but the 2 first sessions are common. So the session 1 and the session 2 are made at the same time for the primer and the standard course. So all the students are grouped together, and then starting with the week number 3, so the room will contain only the ETF standard students. So I thank you very much again for your participation today. I wish you a great rest of the day. Stay safe also, yourself and all your close friends or family members. So, and see you in one of our next Max activity. Oh, thank you, Gary. Thank you, Gary. It's a pleasure for me to illustrate the Max in live conditions. So always a pleasure. So see you very soon in our Max activity. And so take care and stay safe. Bye, everyone.